why did you go for this strategic investment versus merger and acquisition or just greenfield investments? Why did you do a strategic investment?
Right. We took a strategic investment in Chayora, frankly, a number of reasons. Number one, their demonstrated ability to execute cleanly. And so when we looked at Chayora, all the boxes were checked. The licenses were in place. Most importantly, the ESA, the power licenses were in place. They demonstrated that they could build, and it's a unique market to be able to build. It's also a unique market in terms of the size and scale of the market and the pace at which it's growing. We felt that as EdgeConneX, it would be good for our customers, or some of our customers ultimately, who want to either enter China or expand. They're there and they realize the challenges in the market, and it would give us an opportunity to do so. And similarly, and probably touch on this further later, it gave us an opportunity to support the Chinese tech companies, in particular some of the Chinese hyperscalers. It gave us an intimate relationship to be able to support them not only in China, but on a global scale. So that brought it to both sides. So going organically, I think I know what I can't do. I let somebody who's worked at this for years upon years plow some of that hard ground, and then we think together it's going to be a great opportunity.
Okay, so then for your customers, it's an easy way to get into China, and then for your customers, Oliver, what's the benefit?
Well, from our side, I think the overall opportunity arose because we'd reached a point where our existing investor, Actis, who'd been with us for our Series B and Series C, we'd reached the end of their capacity. We were looking for a new financial investor to come in alongside us. And we needed a very significant step up. We're looking at a capital deployment of maybe between $500 million and $1 billion over the coming near years. And we were looking for somebody who had the capacity to bring that to the table. Now, there are many financial institutions in the market that would be interested and are interested in this space. But when we started our conversations with Randy and the team, it was a great opportunity to get a strategic investor on site, somebody who we knew the team, and whose customer base, where they had established incredibly strong relationships, that would help us as well. From the domestic and the Chinese point of view, of course, there is a lot of learning that's gone on there, and being able to bridge and bring out some of the major Chinese players to benefit from the EdgeConneX global network, I think is a really important supplementary benefit that we're going to see more of.
Okay, and then if we look into the Chinese market and what's driving demand for colocation services and hosting, what's happening in China right now, and what's been the impact of COVID on those trends?
Well, I think like anywhere in the world, the digital infrastructure has underpinned the ability to exist through COVID, and China is no different. China's seen huge growth in terms of its demand for the infrastructure and a shift to cloud like anywhere else. There is strong demand for new space. We think China's going to be the biggest market in the world for data center development in the coming years. And we'll see the same as we're seeing in other markets. At the moment, of course, the US and China, in terms of the diplomatic relations, are stabilizing. And when we get through that, I think we'll see again a big push of the Americans back into China as we saw a few years ago.
Okay, and Randy, you've had an extremely busy year. You went from an American operator, in Europe, you went to India, now you're going to China. You're becoming a truly global brand. But what's the plan for APAC? Because you've also hired, I believe it's Kevin Fong, the new general manager for APAC, so we can expect a lot more, I'm sure.
Yeah, I'm sure Kelvin would be happy to demonstrate a lot more, and I think you'll see some of that as we head into the early parts of 2022. You're correct. We did start as a US-centric company, edge-centric company. That expanded both globally and in terms of the product offering. We went from edge to hyperscale, and now it's, as you know, hyperlocal to hyperscale. This past year, we did establish our team in Asia-Pac. It's headquartered in Singapore. As you noted, we have done a very meaningful joint venture with Adani in the creation of EdgeConneX for India, serving India, and this strategic investment in China. Those are two pretty darn big economies and data center economies. That said, we see a lot of interesting opportunity in the Asia Pac region. Not to say that we don't see growth in South America, North America, and Europe. We do, but we just see an interesting opportunity for that full complement of products we bring to bear. China and India are probably more unique in hyperscale, but the hyperlocal to hyperscale opportunities exist throughout that region. And so we're going to participate. I think we can help our customers succeed in those markets, and frankly, that's all that really matters, is helping our customers succeed. If we can do that, then we'll go. If they don't need us, then we won't go. So it's really that simple. But there will be more.
Would you say that you've done the two hardest countries in Asia, so getting to India and getting to China, and then from here will be a bit easier without an Asian?
Certainly.
We do know it's challenging. It's two challenging countries.
We have certainly taken big steps in the first two very challenging markets. That's for sure. I think one of the unique things about Asia and Asia Pac writ large, compared to say the United States or Western Europe, and I use the term loosely, is there's a fair amount of homogeneity there. Regulatory standpoint, the quality of the workforce is very similar, training and skills. There's uniqueness in some regulatory matters, but even that is somewhat standardized. Each opportunity in Asia brings with it an assessment of, can I do this alone? Do I need a local partner? What are the skills of the local partner we need? Regulatory matters are anything but the same. Access to skilled workforce, very different, and so it doesn't scale the same way. It scales, but it scales in a different manner.
Okay, and if we look into the strategic investment that you're doing now, so how is that going to work? Because I believe you've got 2-3 hyperscale data centers in China at the moment.
Well, we've been developing our first data center on the edge of Beijing in a city called Tianjin. It's less than 1.5 milliseconds round trip connectivity. But that's, in China you've got to go, as Randy was saying earlier, you've got to be in the locations where the power exists and where you've got the government support, because this is a strategic industry for China. So building hyperscale data centers in the middle of Beijing or Shanghai just isn't a starter, not least for the land, but because it's about power consumption and resource management in a country like China. So we have the existing development on the edge of Beijing, which we have much more to still develop out on there. The first facility is up, live and operating, and has impressed the people that have been there. It's a great new standard of data center in China. And we just closed about a month ago on the land that we've been acquiring in Shanghai. We've commenced construction already. We'll be ready for service at the end of 2022. And this will give us around a 10,000 rack campus on the edge of Shanghai, which we think is a really exciting position. Of course, China is a massive market, and the capacity of a city like Shanghai to support multiple campuses from multiple suppliers means that I anticipate that we will quite rapidly move to seeking out a second Shanghai campus. It's a city of 25 million people, and the region around Shanghai is 200 million people, which is over half the population of the United States, as you'll know. But beyond that, we do need to have a dot on the map, particularly in the south of China, in the Shenzhen, Guangdong area, or Guangdong province, just north of Hong Kong. And I think if we've got the demand and we see the interest from customers, domestic and international, we'll go there as part of the development of the deal. But it's all, as Randy said earlier, it's about what do the customers need, where do they need it, and how can we give it to them in the most effective and valuable way, whether they're international hyperscale, whether they're premium co-location in some cases for us, or very importantly for us, the domestic markets, which are significant and demanding very similar standards to that we've seen globally to date.
Okay, the Shenzhen development will be very interesting to see. Just a quick question on branding. How is it going to work in terms of branding? Is it something similar to EdgeConneX, or are you going to keep the brands?
No, I think Chayora's done a lot of work with the government, a lot of work with the local provinces where they're operating. It's our intent to not affect the brand at this time. As it grows and grows, as the customer bases mingle, we'll talk about some some additions and twists to it. But day one, go with what the government knows. The team in China has been working on a lot of important domestic relationships there, and I think it just pulled the rug out from everyone. I expect our customers are going to talk to EdgeConneX, and we're going to be able to support them with Chayora, and I suspect Chayora's customers are still going to be talking with Chayora and be able to support them with EdgeConneX.
Absolutely, and I think for us, having the EdgeConneX brand very much as a wraparound, as in the directly associated and overtly associated with our brand is particularly important. It underpins, I think, the interest of the domestic customers in a global solution. Big companies like, if you like, ByteDance and Kuaishou and Kingsoft and others that are below the Alibaba and Tencent level, but immense companies with very big global ambitions. I'm excited about what we can do, with the EdgeConneX team to be able to, platform them into high quality international solutions. But yeah, I think initially, Chayora will be Chayora as it stands in China, but very strongly linked to the EdgeConneX brand.
Interesting. Something came to my mind. When you expand across other parts of Asia, are you going to take Chayora with you, or are you going to go as EdgeConneX?
It's going to stay probably EdgeConneX.
Okay.
So I think we're going to keep Chayora focused on the Chinese market and opportunity, and that's a huge opportunity. So.
Yes, we've only ever been focused on mainland China. And people used to say, they said, well, where are you going to go next? And you'd say, well, this is 1.4 billion people. It's 20% of the world's population with huge barriers to entry. Now, we've as Randy said, we've specialised and we've found significant capabilities that we've built and knowledge that we've built over time that enables the organic route to be avoided. And organic routes have got pitfalls all over the place. And so for us, we're absolutely about mainland China, providing an assured international standard quality solution there for domestic and for international customers. And customers that trust the EdgeConneX brand and are working closely with Randy and the team, we want to ensure that it's a completely seamless and comparable experience, when they want to put their toes on the ground in some of the biggest cities on the planet.
Okay, sounds good. And then, you both kind of touched it already, but what can we expect in 2022 from both of you, from both brands? Because, you this year have had a year that, it doesn't need any mentions anymore. So what's going to happen next year?
Randy's had a busy year.
He has.
I have to say, working with these guys and seeing the intensity of the deal flow is impressive, which is wonderful. No, I think what we're looking to do, what we're seeking to do is ensure that we bring the power of the relationship to bear in terms of accelerating the take-up capacity that we've got on the ground already. We've got multiple projects that are moving through to delivering significant capacity at the end of 2022 and into 2023. And we need to ensure that we're packing that in so that we have the reputation and the capabilities that we've got embraced by the target customers that we're talking to. From our side, the biggest challenge is going to be ramping up in a controlled way the resources that we need. Every market in the world today, it's difficult to get high quality resources. China's no different from that. And you can only achieve world-class international standards with consistency if you've got great people. And so the challenge for us is going to be expanding in a way that is measured, that's controlled, and that delivers what we're expecting and what our new investors and partners are looking for.
Okay. And then as we turn the page on this year as well, we're still dealing with COVID. We have a bit of panic at the moment. Do you see that having any impact on any of your strategies for next year? Any supply chain issues? Will you just carry on with the same strategy you've had since 2020, since when the pandemic started?
I can speak for EdgeConneX. The supply chain challenges are real. If not inconsistent where they hit and when they hit. So we have, for some time now, been focusing in on how to mitigate those as best we can. So I think there are real efforts to do that. I think this supply chain challenge is going to be here with us throughout all of 22, and it wouldn't surprise me if it goes well into 2023. So there are efforts to make that work. Standard designs and reference designs and kind of a proven implementation allows us to standardize on some things, and have a primary and secondary and providers of equipment, et cetera. But it's a real challenge, right? And we're going to continue to manage it. It has not impaired our ability to support our customers so far, and I don't anticipate it will. In the greater scheme, there are all of a sudden you're kind of marching through a schedule, and stuff that was supposed to show up shows up sometimes 2 weeks later, sometimes 2 months. So there's blips in it, but those challenges are going to continue to exist. Same time, the pressure on the digital infrastructure is not easing up. Right? It's clearly the underpinnings that allowed this world to continue in these strange and unprecedented times we had. I've actually seen it drive an acceleration of cloud and content and connectivity needs in almost every single market we've been in. And we've had to find ways to open new hyperscale campuses, open new edge deployments in countries that we heretofore hadn't operated in over the past, over 18 months now. Yeah. Over the past 18 months. I actually don't see that stopping. I see that push expanding, and yet being, some headwinds with supply chain challenges. So it's going to be a challenging 22, 23 to execute, not for need, but for execution challenges.
Yes, I mean, we've seen from the Chayora point of view, significant challenges in mobility, of course, and traveling, because, China is continuing with very strong anti-COVID defenses, and it's exceedingly difficult to get people in and out of China. Fortunately, 90% of our people are in China. We are, a Chinese-based business, even though we have international ownership and a number of senior executives who are international. But the most important thing from our side is making sure that we look after the health and the safety of our people. We place their ability to continue to support us well at the highest order. And that means that we've got to follow the government regulations. We've got to ensure that people are regularly tested. We have very stringent healthcare and COVID control measures on each of the sites. And I'll touch wood, we've done very well. We've had very limited impact from that, and we hope that will continue in that regard. Where if we find that China develops greater numbers of COVID cases, we'll have to do what the rest of the world's done, and that's work around it. And I think our teams have been very innovative in that regard, because some of the international customers who love what we're doing, simply can't get into China to go and look at it. So we've invested in, fully immersion, Oculus headsets, virtual tour abilities, so that people can walk the site, they can go and explore it. And it's blown me away, actually. I mean, it's extraordinary what you can do these days. And like so many others, we've had to revert to the use of good technology, whether it's health and safety tours or final inspection tours by iPhone around the sites, or whatever it needs to be. So I hope we'll see an opening up. I don't think we'll see much change in the course of 2022. I'm with you, Randy, on that one. I think it's going to be the following year before we see, what we might all recognise as a more global normality. But look, we've always had to adapt, and as working in pioneering environments, you're always going to get another challenge thrown at you, and I'm sure we'll step up to the mark.
Okay, and then because I've got you two in the same room, which is quite rare, I mean, it's been an extraordinary year as well for the data center market as a whole. I mean, so much consolidation. I think 3 of the largest 4 deals were all done this year. The last 2 core sites in Cyrus one just a few weeks ago, and these public companies being taken private as well, and there's so much private equity money coming in. What's your view of the data center market generally? So not related to your businesses directly, but just what do you make out of this? Like what's happening now?
I think the interesting thing is what you noted. You actually saw some big privatizations of heretofore public companies. That didn't surprise me, right? There, for a couple of reasons. The private capital can be very efficient, and the cost of that private capital can be extremely competitive, and there's a fair amount of it. I think the other thing with with the data center industry and with what's happening is the time to invest and the time when that investment yields measurable results. There's a bit of a lag and lead time there, right? Just the nature of the beast, and so public markets are sometimes more or less patient with that. I think with the private capital markets, you're finding a recognition of that timeline and a value for it. So I think that you will see more, not less, in terms of M&A transactions. It is a game of scale. Ultimately, it's part of the reason we had such a strong push over the last few years to make sure we got geographic as well as megawatt size and scale. And our life is in many ways more challenging now that we're there, but in some ways much easier, right? And so it's why we've made the moves we've made, right? These are also big investments and big moves over the course of time. But it takes a while to yield the results, right? And if somebody says I invested today and I expect an answer tomorrow, I expect progress tomorrow, but it will take a while for that to hit on the bottom line. As I said, private capital understands that maybe a little bit better in some cases than public capital does.
I mean, the public markets are not very patient sometimes.
Finicky.
I think I'd agree with that. I think maybe just taking a slightly different perspective to add to it, though, is I think we're seeing early stage maturity of the international market. We've seen the shift from enterprise to cloud taking place over the last 10 years, but we hadn't seen the emergence of global brands to any great degree. I think there will be maybe 3-4 significant global players that emerge. We always looked, as I mentioned a little while earlier, China's a big place, but it's a tiny place unless you're part of a global network. And I think our excitement about the opportunity is that we believe that the EQT and the EdgeConneX combination is going to be one of the most successful of those global players. It's important to be part of one of those in order to benefit from the purchasing scales, the economies of scale, but also the customer perception as well. And I think we'll start to see this new breed really come through in the course of the next few years. As to the public to private, I think the ability to access public funds is always an attractive element, but it comes with it a lot of other different pressures. And as Randy said, the value of private money, the cost of private money is very attractive in many instances. So I think we will definitely see more picking up of the emergent specialty, entrepreneurially led, regional based businesses, whether it's in some of the South American countries, it's some of the Eastern European countries, other parts of Asia Pac. But I think this is a trajectory that's a good industry to be in, and an exciting one to be spending the next few years in. It's I can't think of more an interesting one at the present time. Who could have thought? But,
And especially with COVID, it really proved it's worth it.
Heavens, yes.
Yeah, because we were just talking about 20 years ago, we wouldn't have a job probably.
Well, everything would have ground to a halt, and
Exactly.
I think what's extraordinary is that there have not been any global systemic failures of IT infrastructure during this period. The engineers have delivered.
We still got a few years to go.
There's been a couple of blips, but who'd have thought?
Nothing major.
Turn it off and start it up again was the IT advice that we
Yeah,
all ran.
that's right.
We haven't had to do that on a global basis.
Unplug it.
No, hats off to the industry. But well, look, Oliver and Randy, thank you so much for talking.